For more analysis on this, I'm joined by Geoff Wood, who's the head of risk at fund manager Morphic Asset Management. Geoff, thanks very much for joining us. Good to see you. Now, can Donald Trump shore up the support required to get this tax plan through? Because he does need a win on this, doesn't he?
He really does. I mean, this is something that's been going backwards and forwards now all year, really, and it's still amazing that markets are managing to rally and fall on it, and that it's not necessarily new news at any given stage, really.
Yeah, so if just sort of help us through what happens here. If this gets voted in, then the House and the Senate versions, they're different, aren't they? So that still needs to come together to be sort of moulded into some sort of plan that the President wanted.
Exactly, that's right. So, I mean, the committee that have put this forward to the vote in the Senate made that move last night. Why markets liked it was because it seemed that they wouldn't have put it to the vote unless they were relatively confident that they could get it over the line, and in that people were inferring that some of the guys that have been holding out in the Senate are probably starting to toe the line, or they think that their sort of particular nuances will get ironed out with time.
All right, well, let's have a look. Sorry, Geoff, I just want to show viewers, I'm not necessarily going to read them, but let's have a look at some of the tweets that President Trump has put out. He's sort of talking about meeting with them, but he's still very much kind of, in an intimidating stance. He doesn't appear to be too conciliatory at this stage, and yet do a couple of the main holdouts appear to be perhaps towing more the party line?
Yeah, I really think that was the sort of marginal news overnight, that it seems like the Republicans are coming together on this one. And as you highlight, I mean, there are two different bills. There's one in the Senate, one in the House. So they'll next need to be reconciled to get something that both sides agree with. And at that point, it can then go to Donald Trump to enact it.
Yeah. All right. So where do you think, I mean, let's talk about some of the stocks, I guess, that are really going to benefit, because if he gets it through as he wants, won't it potentially harm, to a greater degree than they're harmed at the moment, the mega cap stocks who don't pay a lot of tax, but it will actually benefit the smaller and mid caps? Yeah,
that's correct. I mean, so a lot of these big, large and mega cap companies in the US have some pretty sophisticated tax structures in place, and some of them hold a lot of funds offshore to try and avoid paying tax in that way. So the real beneficiaries are your small to mid caps, and so your best proxy of what's the market saying about a probability of this thing getting through is looking at the ratio between the small to mid caps against the large caps, and last night was a good night for the small to mids.
Well, it sure was. Now, what was some that stood out for you?
Well, I think it was just such a cross-section of a night where, like you say, we had this going on one side, and then at the other side, the big news was Jerome Powell get officially confirmed in, and some of the comments that he were making around the banking sector.
Yeah, sorry, just before we get on to him, what were some of the stocks that you like?
Oh, just your small to mid cyclical stocks or financial stocks, anything sat in that space.
Yeah, well, as you say, I mean, Jerome Powell had the confirmation hearing overnight, was very much sort of slow and steady as you go, I suppose, was his approach. Let's have a listen to some of what he had to say.
If confirmed, I would strive along with my colleagues to support the economy's continued progress toward full recovery. Our aim is to sustain a strong jobs market with inflation moving gradually up toward our target. We expect interest rates to rise somewhat further and the size of our balance sheet to gradually shrink.
Geoff, it was very much steady as she goes, and that, as you say, seemed to buoy markets as well.
He's largely seen as a continuation of Janet Yellen in terms of steady as you go, in terms of tightening of policy. He's a big advocate of the open form of communication that the Fed have adopted. But where he does differ most is a lighter touch on the financials and unwinding some of the regulations that have been put in place over the last 10 years. And that's why it's such a good night for the banks. Because he's looking at things like how do you define what a systematically important financial institution is, and if he raises the threshold on that, then essentially it opens up potentially a wave of M&A between these small to mid-cap banks, so that's what they were particularly excited about.
Yeah, no, extraordinary. And then just very much the rate hike case for December?
Yeah, I mean, he said it about as confidently as he could, that thing's pretty much a done deal.
Yeah, all right. Geoff Wood from Morphic Asset Management, thanks so much for joining us.
Thanks, Helen.